All right, guys, we're here with the Navia freight market update. I'm here with Ioannis Papanthimos, who is the head of our ocean products. He's going to provide a little bit of expert analysis on the current situation. Ioannis, let's start off with the capacity. We work on a traffic light system here for everyone watching. Green means 70 to 100% of capacity. Orange is 30 to 70% of typical capacity. And red means less than 30%. So which for you at the moment are the green trade lanes? Let's start off with those and work from there.
Yep, thanks, Greg. Well, speaking for March, it seems that the green ones are Asia to Oceania, excluding China, as well as USA to Oceania. In these regions, we would say that space is readily available. Whereas on the other side, China into Oceania, as well as Europe into Oceania, is a little bit more tight. But again, space is there.
And when you're referring to Oceania, both Australia and New Zealand?
That's correct.
And Pacific Islands, I assume, fits under that umbrella as well. Any reds for this month coming up?
Not yet.
Not yet. Okay, that's good to know. Let's move on to blank sailings. Again, I assume we're going to be, given it's green, similarly placed?
Correct. It was expected to a certain degree because we're coming just right after the Chinese New Year. And most carriers would have the vessels available in order to get the cargo rolling. So for March, especially out of Asia into Oceania, we were seeing pretty much almost zero blank sailings, which is again what we expect.
That's good news. Now, speaking with our air freight team, Alana Raid, our global head of air freight, has said that air freight is similarly placed in terms of capacity. China is probably in orange, where there's some restriction, but not as bad as it would have been, say, pre-Christmas during peak season. And the rest of the trade lanes, rest of the world is relatively free into Australia. Let's talk about rates, Yanni. So on the ocean freight side of things, how are rates looking? We know that they softened into Chinese New Year last month. What's the latest on that?
Well, for March, the initial thoughts and the initiative from the carriers were to go and implement some GRIs, which would increase the FAK rates by approximately $300 per TEU. At the same time, though, it seems that the market is still soft, so that hasn't materialized. As such, the FAK rates were, at best case scenario, flat, or in most cases, they have gone down for the first half of March.
Okay. That's, again, so softened demand has kind of continued, it seems. And I think that, to be honest, I think that's going to be a trend, at least for the next little while. Like in Australia, at least, we've seen some interest rate relief, but we haven't yet probably, I mean, I'm no economic specialist, but from my understanding, we haven't yet seen that translate into increased consumer spending and increased demand for products. Seems like a time of a bit of uncertainty, given all of the disruptions in terms of looming trade war and I guess the beginning of tariff implementation by the Trump administration. How do you see that panning out over the next month? If I'm an importer, supply chain manager, what do I need to look out for and what do I need to do in the next month?
Well, for Oceania at least, we are pretty much entering that period of time when the named account negotiations will begin. The feedback that we're getting from the carriers is that we do expect the named account rates to be quite elevated compared to last year. That would be the general, I guess, pattern, and this is something that the supply chain managers should be aware of. The extent and the level of the rates, though, is yet to be determined. Most carriers are still waiting for the large BCOs to finalize their named account rates, which will pretty much point the direction of what's going to happen about the NVOs and the actual named account customers too. So unfortunately, it's a little bit of wait and see. Globally, as you said, Greg, with the tariffs imposed by the Trump administration, with the Red Sea situation still not being clear enough, it's a period of uncertainty. We'll need to wait and see how things will unfold. So until the dust is settled, the supply chain management need to be a little bit cautious.
Sorry, just going back to the rates, when you mentioned BCOs, so for those watching, we're referring to large importers who negotiate directly with shipping lines.
That is correct.
The likes of, Walmart and IKEA and these huge, conglomerates. So they get kind of first dibs on the NAC allocations, is that right? And then that will dictate the rest of the market and the rates that they get. Is that what you're saying?
Exactly right. And at the same time, we need to keep in mind that first week of March, we have the TPM in US, which is another significant point in regards to the named account season for the US cargo. So I guess we'll have a better view and a better understanding in the next couple of weeks.
Beautiful. All right. So it's a bit of a wait and see situation. I had the same feedback from Alana, our head of air freight, that although e-commerce continues to be strong and boost up the general spot rates, there's a little bit of uncertainty and a bit of a wait and see situation as to how the rest of the year is going to pan out. So proceed with caution, I guess, is the overall theme by the sounds of it.
Do that, yes.
Proceed with caution. Thank you guys for watching. And if you have any questions at all or would like to talk about your supply chain, please email us at learnmore@naviafreight.com and we will see you next time.